Thanks for doing this. I appreciate it.
Of course, my pleasure.
Just really quick, can you introduce yourself?
Yeah.
And, what you do here at Top Flite?
So, hey, my name's Dillon. I'm branch manager here at Flite Financial. We just opened up a branch here in North Scottsdale, but we're located all across the country. We're a privately owned lender, but we kind of do all residential mortgages, across the West Coast here.
I think the reason we're doing this chat here is because I think there's a big misconception out there from a consumer perspective about what it is to actually either invest in real estate or to own your own home. I think a lot of people, especially now in this time, which invest.
A little crazy.
It's a weird time. It's a weird time to be alive in. I feel like there's gonna be a case study years from now, and people are gonna be studying this era like we did the '60s. But it's a very tumultuous time. Mm-hmm. There's a lot of people that are uneasy about spending money and maybe making investments or taking
lots of uncertainty.
Exactly. Yeah, and real estate is always one of those relatively safe investments, and even for somebody who's not looking for an investment opportunity, owning your own home has its benefits from a tax savings perspective.
Absolutely.
And so what I really want to focus on is, you sent me the one pager, thank you so much, by the way. This is very concise and easy to read about what products you guys offer. Mm-hmm. So I just kind of want to go over this and focus in on the individuals that are probably apprehensive and thinking, maybe I can't afford this, but we want to educate them that there are products out there for them. So I'm going to give you the floor. You can just stop at the top and we can go all the way down. And
honestly, most people have kind of uncertainty when getting into anything big financially. When you're buying a home, it's the biggest thing you're ever going to have to deal with in terms of debt, and there's a lot of uncertainty when it comes with money. So what we like to do here is I don't like to just put people in certain loans. I like to build loans around their specific scenario. So for instance, if you start off with a conventional loan, most people think you need 20% down to do a conventional loan, which kind of deters a lot of people from wanting to buy a home. But actually we can go down as low as 3%. So for a first-time home buyer, as long as you meet the income requirement, you can go all the way down to a 3% conventional loan, and you get discounted mortgage insurance and everything like that. It's very beneficial for someone who has a little bit of a higher credit score on that end, just to make sure that they're saving the most money possible.
And what is that floor? What is the minimum income requirement?
So the minimum income requirement depends on county. So for instance, if you're looking in Maricopa County, it's $55,380. It's very specific, but everyone...
And that's per annum. Right?
Yeah, and it's... What happens is it changes every single location. So if you're in a high balance area, like somewhere in California or something like that, it changes and it would increase. But what they do is they keep it at a cap to ensure that they're benefiting that lower class and that lower average of income, just to ensure that they can get in a home but still be able to make those monthly payments.
So is there a limit to them as far as the price range in the home that that these individuals are looking for? Is that kind of like a sweet spot that this loan will work for?
Absolutely. So a conventional loan, they just increased the limits here. So we actually can go up to a $510,000 loan amount and stay within the conventional loan parameters. Once you go over $510,000, that's when you're going to get into a jumbo loan, and that's a whole different story.
Yeah. You can get quite a bit for that here in Phoenix.
Yes, you can.
I lived in LA for 7 years, and
that's
woo!
It's a little different over there. It's a little different over there. They just moved theirs up even more too.
Yeah,
so.
it's amazing. It keeps going up, and it's like people are leaving to come here.
Absolutely.
Places like here, Texas is another hot spot.
Well, it's a lot cheaper here too. Yeah. If you're looking at property taxes, they're way cheaper here as well, which lowers your monthly payment. Because when you're getting into anything lower than 20% down payment, typically you have to have an escrow account, and that escrow account is built into your monthly payment. And that consists of your property taxes and homeowners insurance. Yeah. When you're not in a place like California, it's a lot more cheaper than pretty much most places in the country right now, which is making everyone come here.
You hit on a really good point there, the tax structure. Mm-hmm. Now, so I can imagine, I remember when I was living in LA, right? Mm-hmm. It was very difficult for me to move forward because there was so much complexity to the transaction, and the tax rates were just unbelievable.
Absolutely.
So, and I think that's one of those factors most people don't think about is you have, homeowners insurance, right, which is required under certain loans.
Absolutely.
And this conventional loan is certainly one of those that requires that. Yeah. So, and then all the other fees that are tacked up on top of that. So, and I'm looking here, minimum credit score 620.
So we can go down as low as a 620, but really I like to vary that just depending on the specific client. So that way when I get their credit score, I can really determine what way is the best way for them specifically. Because if you have someone with an 800 FICO score, they're going to have a different interest rate and they're going to have a different mortgage insurance calculations just because that FICO score is a little bit higher. So what I like to do is I do it on a case-by-case basis, but if you absolutely want a conventional loan, then yes, I can go as low as 620.
That's crazy.
Yeah.
So what if you're close? What if you're like, okay, I'm at 600 or something like
So
that?
this is.
Do you work with the clients?
Yeah,
Say, hey, there's some opportunities for you.
absolutely. That's a great question.
Yeah.
So I actually do a little bit more work than most people, and I have the capability of doing what's called a rapid rescore. Most people don't know you can actually do this, but I work directly with the credit bureaus, and I can run a what-if simulator on your credit. So let's just say, the algorithm lets me play with the numbers a little bit, and you have to pay down $150 on your credit card, but it'll shoot your score up 5 points. I can submit it directly to the credit bureaus and fix your credit within 3 to 7 business days, rather than the typical 60 to 90 days for the credit reports to actually report your change in income.
Here I am thinking I need a financial advisor, and maybe all I need is a pre-qual.
You need a good lender. You need a good lender.
Well, I think a lot of people forget, and it's easy because this industry is stigmatized, unfortunately. And what happened in 2008, 2009, people are still a little uneasy about trusting lending institutions and agents, real estate agents as well. From an outside perspective, I completely get it. Before I got into real estate, I had the same attitude, unfortunately, and it was a very biased and unfortunately a negative attitude towards it.
Yeah, just a little extra fear, I think.
Right, but I think what people fail to realize is when you're actually in it, it's in your best interest as a business professional to think about the end consumer, because if they're winning, you're winning.
Absolutely.
And they're going to refer you. So it's not like this conniving industry where we're all trying to pile on top of each other to get on top. It's really in our best interest to forge those relationships and help them how they can. And I think that's why I'm glad we're talking. I think a lot of people fail to realize it's not just on the agent level. It's also on the lender level.
Well, it's supposed to be on the lender level, but unfortunately, a lot of lenders are still stuck in the old ways.
Yeah.
They really don't want to educate because it is such a complicated process. So I've kind of figured out a way to be able to convey it in a way that's kind of more understanding, but gives you that confidence knowing, what route you need to go and what are the pros and cons to every single type you do.
If I was coming into this, I would speak to you before an agent.
Absolutely.
Just saying.
Absolutely.
Let's move on to the VA. So we got the VA. That's a pretty well-known for veterans, obviously. Can you tell me why this one's a little bit different, maybe, or what additional benefits this? Because these are all relatively new products you guys have.
So my VA specifically, that's kind of like my bread and butter. That's what I focus on. I have family in the military. I started off my career in a military-owned bank. So that being said, is I really was versed on VA loans, but also how they were getting taken advantage of, their credit issues that they thought they were running into that they never thought they could buy a home. And a lot of them don't know that your VA loan is guaranteed, meaning there's no down payment required. And typically, working with a great agent and a good lender, we can get your closing costs covered as well. So virtually, you're coming out of pocket with $0. And so what I did to make myself a little bit different is I actually can go all the way down to a 500 credit score, and I can also go up to a 64% debt to income ratio. This is really good for veterans that are getting out, that are retired, that are just on, Social Security or retirement or disability. It allows them to push the parameters to really get the home that they deserve, and it's my goal to help as many veterans as I possibly can.
It's amazing. That's a great product. My brother-in-law has both of my brother-in-laws are Air Force veterans, and one of them is just about to retire from the pararescue special forces.
Oh, no kidding. Wow.
He's kind of a hardcore dude.
Yeah.
And so the one brother-in-law was kind of he only did 4 years and did it well, but got out. And I was a little bit more business savvy, but you have a career veteran coming out, right? Yeah. They have a little bit less of an understanding of how these things work, obviously, because they're focused on being an operator the entire time. So I think why is it important for a veteran coming home to invest in real estate right away?
I think there's a handful of things. So as a veteran, having that guarantee to be able to buy a home with no mortgage insurance and no down payment, right there alone, that is better than renting. because when you're renting, you're paying someone else's mortgage. You're not paying yourself, and that money just goes away. As a veteran, the first thing you want to do is become financially stable. You want to have security, but you also want to start building an asset. And the best thing you can do is a home, because it's an appreciating asset. It will always appreciate over time. And that being said, is you're paying yourself. You also have great tax benefits, and when you're a veteran, the best thing you can do getting out of the military is saving money and investing to make more money to allow more opportunities for yourself.
Right, and you hit on a good point, the tax saving. I think a lot of people, they hear that, they say, of course, yeah, that makes sense, assets, tax write-off.
Yeah.
But how significant is that?
It's very significant. So especially, most mortgages are front-loaded with interest. That's what you can write off. So in the beginning years of your loan, you can write off a lot more. And that obviously has the tax ramifications, a little beneficial. Maybe you can save yourself some extra money at the end of the year. You also have depreciation that you can write off at the end of the year as well. And any upgrades you make to the home or anything, you can add that too, and eventually add more value in your home, more equity, and then at that time your house is worth more and you just had a good investment.
Right, and so is obviously a military veteran coming out right away, they might not have found a post-military career just yet. Is there any income qualifications for the VA loan?
Absolutely. So for a VA loan, just like any other loan, this applies to every single loan besides non-QM loans. And what that is you have to have a 2-year history of employment. Okay, at that time, that 2-year history can go down to 1 year. If we have some substantial documentation showing that that's going to continue, and and that will move forward and making that money. Because what we're looking for is this continuance. We want to make sure that they can pay their bills on time, and that way there's no defaults or anything that negatively hurts them. So typically, I like to make sure that all my clients have a steady flow of income, and that even though I can use their income before taxes, I like to show them everything after taxes. That way, their life isn't affected in any negative way, and they can still pay their bills and have the home of their dreams.
Oh, it's so nice that you said after taxes. Because it's so easy to entice people with this awesome number and say, but then you got, but then there's the taxes.
You don't want to be house poor.
Right.
And most loan officers are just trying to get another deal. They treat you as a transaction. Yeah. And so for me, I just look at, my customers as how I want someone to treat me.
Of course.
If I was getting a loan, I want to know everything I'm getting into, and I want to know, can I pay my bills? Do I have anything extra at the end of the month? Because on every type of loan, you get qualified on your gross income. So,
and one more thing about the VA, if you're coming out of the military and you're not going to cold turkey just exit the military and you want to go on reserve, for example, does that qualify as 2 year? Does that qualify for that?
Yeah. So as long as you have your entitlement through the VA, you can still be active and still get a loan. It's just a little bit different in terms of documentation, because you need to know, where you're going to be living at. I need to know what income's going to be changing or anything like that, or where you're going to be stationed. But that's just documentation purposes. Everything else, you can still get qualified. You can still use your VA benefits as long as you've met those requirements for the VA.
So what if you're exiting cold turkey, not doing reserve, and it's very difficult, I think, to identify, for most people, not just veterans, when they want to have a career change, what you want to go into. What advice would you have for veterans that are maybe 2 years out from retiring, that are thinking about taking this loan on? They need that 2-year income from a stable job. What would you recommend for them? What is the minimum qualification? Let's say somebody gets a part-time job at Starbucks. I don't know.
Yeah.
Anything like that. Do you have any recommendations for those people?
Honestly, it really just depends. Part-time's totally okay. Hourly's okay. Salary's okay. I think they should really just think about where they can put their their skill sets and benefit companies the most. Because for me personally, I would hire a veteran any day, and that's purely because I know their work ethic, and everything, that comes with being in the military. It's a great asset to have, as an employee. So I think it's really on them, what they kind of want to get involved with and how they want to make their money and spend their time. Because for me, I don't judge either way. As long as you have money coming in, it doesn't matter,
Right.
where that money's coming from.
Yeah. Much easier to, I don't know why, it just feels like it's easier to trust a veteran.
Yeah, it really
yeah,
is.
I mean, I know a lot of veterans, from my family history. I actually wanted to be a PJ when I was
Oh, no kidding.
high school. Yeah, I was going to go to special
I was
forces.
supposed
yeah.
to actually go to Ranger School.
Oh, were you?
Yeah.
Why did you?
I compressed 3 discs in my spine, my C1, L4, and L5, and then I dislocated both my shoulders and tore both of my labrums.
How'd you do that?
Rock climbing
Yeah,
and weightlifting.
Yeah.
So for me, like I just didn't want to negatively negatively affect my comrades.
Sure.
'Cause if I can't, really compete at that level and hold my end of the stick, I'm just a weakness to everybody else.
Yeah, 18-year-olds really are geniuses.
No kidding.
I actually, so mine was shattered my L2 vertebrae.
Oh no.
So I have the fusion surgery with the L1, L2,
Yeah.
L3 fused together with titanium rods and screws.
No kidding.
Yeah.
Thankfully I didn't have to deal with that part.
Well, yours is kind of cool. You said you used rock climbing and then weightlifting. Mine was literally like I fell off a balcony at a construction site. But I tell people I started a fight club.
Yeah, or something. Jumped off a bridge or something.
Yeah.
Something cool.
Yeah.
Absolutely.
Anyway, but all right. So moving on, we have 3
Yeah.
more products here. We have USDA,
Yeah.
FHA, and jumbo loan, which we'll get to. But you said that one's the one is probably the most unique.
Absolutely.
So let's kind of briefly go over USDA and FHA.
So USDA is really not that popular in Arizona just because we don't have really many rural areas to be able to qualify for a USDA loan. It's really good because it's 0% down. It's a little bit more enticing for someone so they don't have to pay cash, but you have to be in a specific area. So there's only a few of them and they're located on a map online. You can literally type in USDA eligibility map and it will come up and you can see if you're eligible in your area, and then if you are, you can qualify for a USDA loan. There's not many locations that are, but it's an option and I like to have all my options available just so I can make sure I can meet all the needs of my customers. But the main one is really FHA. That's one of the biggest loans out there right now, and it's probably one of the most popular too. Not only does it have the lowest interest rate out of all of them, as well as VA, but you can qualify all the way down to a 500 credit score with 10% down, or you can go to a 580 credit score with 3.5% down.
Wow.
So you can stay at 3.5%.
Yeah. Which is pretty much the floor when it comes to percentage down payment. Around 3.5%.
Yeah, 3.5 are the absolute lowest.
Right.
But once you get to that 3.5%, not only do you have a really good interest rate, but it's government-backed loan.
Right.
So the only negative the negative aspects of a VA or FHA loan is you have an upfront funding fee and you have mortgage insurance. Okay, what that does is that protects the lender and it protects the government on your loan just in case any defaults.
And those are included in the premium, right? Whereas the other ones, it's not bundled together.
Absolutely.
Right.
So, the upfront funding fee that's rolled into the loan, it doesn't have to be out of pocket, and then your mortgage insurance is built into your monthly payment. And the only way to get rid of mortgage insurance on an FHA loan is to refinance eventually into a conventional loan to get rid of it. But the FHA loan is a phenomenal loan for a first-time home buyer. Phenomenal. It has a really great interest rate. That way your monthly payment's very low and affordable, very low down payment. And then not only that is it's government backed. So it backs up your asset, which is basically just backing up your own money.
Right. And that's why they're able to get that low percentage rate, low FICO scores, because it is government backed. It's essentially subsidized. Right.
Absolutely.
Yeah. Right. What does FHA stand for?
Federal housing.
It's interesting that they chose that. It's a little obvious. Could have been more creative.
They could have been, but they want their money.
Hey, keep it simple. I totally get it.
Yeah, keep it simple.
Yeah. Okay, let's go on to the jumbo loan.
Yeah.
This is the one that you said is kind of the most unique that you guys are offering.
Take some water for this one.
Yeah. And correct me if I'm wrong. Speaking to Landon before this.
Yes.
Right? This is something that hasn't been rolled out to just about any other lending institution yet.
Absolutely. Yeah, so this is a very, very unique way of doing lending. So you have your traditional jumbo loans, that's anything, or at least in Arizona, that's anything over 510,000. You now are going into the jumbo loan requirements. Okay, it's considered a non-conforming loan, meaning you have different guidelines you have to meet, whether that's reserve requirements, income requirements, debt to income ratio requirements. It really is on a case-by-case basis because those loans are so big that we have to meet certain criteria based on someone's employment and their credit and everything like that. Typically, jumbo loans also have a higher credit requirement. Usually our bottom floor, it's 680. So you can go all the way down to a 680, but I really recommend going into a jumbo loan over a 700 FICO score. There's just a big difference in interest rate wise, and it'll save you a lot of money when you're dealing with those big amounts. But the creative side of lending is an all-in-one loan. And this is the first of its kind. It's basically a home equity line of credit and first position blended with your checking account. And so how that basically works is you can purchase a home like any other home. You get a loan, takes 21 days or so, get pre-approved and you buy the home. The only difference is it's simple interest, meaning your monthly payment is only interest. So if you were on $1 million loan, instead of a $6,800 payment, your payment's going to be like $2,800. And then at that time, because it's blended with your checking account, any extra money that comes in your account goes directly towards principal, but you have 365-day access to that equity. So if you want to invest in something else, if you want to pay off your credit cards, which are at a 23-25% interest, you now can leverage your own home equity and pay off your other debt, or you can write a check to yourself and go buy a new car. And it's very cool because it takes away any chance of having to refinance, and it takes away any, to be honest, it really takes away interest rate in general. Interest rate change every single month because it's simple interest. It's based off of prime rate.
Right.
But the thing about that is because it's principal first, your loan payoff, even if you're at a high interest rate, your loan payoff is 9 years versus 30.
Right.
So in terms of interest, you're saving yourself hundreds of thousands of dollars, and you have constant access to your equity. The only thing is this is really for a financial savvy.
I was literally going to
borrower.
say, yeah, it sounds like, so to have, and 700 credit score seems difficult, but there's definitely steps you can take probably within a year's time to get close to that score.
And if not even sooner than that.
Yeah.
It's really just making sure you take the right steps and you're playing with the algorithm to make sure that you're increasing your credit as quickly as possible, and you can go all the way up to an 850.
So let's say I come in today and I'm at, maybe I haven't been irresponsible with my credit, but I haven't really put steps forward to build it, and I'm hovering around a 500, right? And I come to you and I say, okay, maybe it's right now's not the time to get into an FHA or something like that. I'm interested in this jumbo loan because the opportunity's there. Will you work with me so I can get to that as qualifications?
Yeah. So most lenders will just kind of push you aside and have you do it on your own. For me, I really pride myself in my financial literacy to ensure that I'm educating all of my customers to where even if I can't benefit them now, I at least can give them the tools that they can help themselves. Yeah. So what I do is if I pull their credit, like I said earlier, I can run a what-if simulator. And once I run that what-if simulator, I can give them a game plan on what to do to build their credit. I can tell them they have to open up new accounts or pay down their balance to a certain utilization number. I can do things to show them exactly how to get to their goal so they can qualify. And down the road, I can help them once they're ready.
And this essentially, these consultations are essentially free.
Absolutely.
Yeah. I think a lot of people forget to realize there's people out there to help you. They think everything. I think more obviously if you're consulting with a lawyer, that's a little different.
Yeah, a little different.
But yeah, and as an agent, I would love to say, yeah, come talk to me first. I know all these guys. Mm-hmm. But I think people forget you can actually go directly to a lender and speak to them first, because I think once people are apprehensive with talking to agents because they're like, oh no, as soon as I start talking, they're gonna be like talking to me every weekend. I don't know if they're trying to sell me on something, right?
Absolutely.
So I think that's one thing that people fail to realize, you can go directly to the lender.
You can.
In fact, it's actually better for the agents.
It really is.
Because if they know you've already spoken to a financial advisor and gotten a pre-qualification, that's the first thing any good agent will say.
Absolutely.
First question. All right, do they have a pre-qualification? And if you don't, they recommend somebody. But
Absolutely.
I encourage anybody watching to actually speak to you guys first.
Yeah, I mean, I would really recommend it. I mean, having someone you can trust in your corner through one of the most stressful things you'll probably go through from a financial aspect in your whole life. It's nice having someone that's really there to support you, and kind of walk you through steps. And unfortunately, there's a lot of lenders out there that treat it like a transaction. You call them, ask them questions, and they just want an application or they just want this. For me, I think it's a lot more beneficial, even to my partners like yourself, to where not only do I pre-qualify them, but I pre-approve them. I want them to be confident that their loan's going to get done. I'm not going to just verbally, say, oh, that's how much you make, because that's what happened and what's messed up our economy in 2009. Yeah. So what I do is I do full pre-approvals. I want to give both their agent and themselves the confidence that their loan is going to close, because we have a full pre-approval. And what a pre-approval is it's basically an online application plus supporting documentation that allows me to verify both their income and their assets. Very easy to get, and I can do this in less than an hour. Most people just don't put in the time to explain all that, and it just wastes a lot of time.
I think it can be intimidating. I get it.
Absolutely.
I'm coming from the apparel industry before this, and you'd find new designers who had no idea about how the industry worked, and they would try to go at it themselves, and they forget there's all these resources for them available for free.
Absolutely.
Just get some information, right? And that's where it starts.
Yeah.
And why is it important? I always like to ask anybody in the industry, why is real estate one of the most secure and I guess practical forms of financial independence, in your opinion?
Because it's not going anywhere. A business can go somewhere. They can run out of business. They can go bankrupt. They can do something. If you buy a piece of land, that is your land. So how I think of it is our population is always going to be growing. And people, the number one thing they need is somewhere to live. So the more space that's taken up, all that means is that increases the value of your particular space. So when you're dealing with stocks or anything like that, you can't control that. There's so many factors that play into it that there's risk to it.
High risk versus...
Exactly, and buying a home is a low risk.
A little more like a mutual fund in comparison as far as the risk factor goes.
Absolutely. So how I like to talk to my customers is when you're buying a home, you really just need to think of three things. Is this going to be your home forever? Are you looking to eventually sell this and make some money off of it to go buy a bigger home? Or are you looking to rent it out? Those are the only three things you need to think about when you're buying a home. Once you think about those three things, I then can direct you to whatever route you need to go, and same with yourself too, because now you know where to put the customer. If they're looking for a rental, they're not looking for the very nicest place in the perfect backyard and everything. They're looking for convenience. Is it close to a highway? Is it close to a hospital? Because those are the people who are renting.
Right, and especially now with Airbnb, there's so many ways to make money, and it doesn't require a lot of knowledge. All you got to do is meet the people who know what they're doing.
And people try to overcomplicate it and get confused of where to buy and what to buy. You ask yourself those three questions, and then you create a game plan off of those three questions to ensure that your goal is actually met.
That's what we're here for as professionals. We're here to take all that guesswork, and Google can be a black hole.
Oh my gosh, it really can.
Yeah,
it really
don't. I always tell people. People ask me, why do I need an agent? Why should I go through? What's the difference between lenders? And I always say, well, if you were in legal trouble, would you go represent yourself, or would you hire a lawyer? One thing I really like to compare, and for people who are apprehensive about real estate being a safe investment, right? I always tell them there's three markets that will never go out of style for very fundamental reasons. One, fashion, because people need, in most countries it's illegal to be naked. Right? You need to wear clothes. Food industry, restaurants, people need to eat, otherwise they don't survive. And shelter, real estate, it's not going anywhere. People need a place to live. It is one of the most secure investments you can make.
Absolutely, and you have an option of throwing your money away to someone else and paying someone else's bills, or paying yourself and building yourself an asset.
There you go. So tell me, so you guys separated, not separated, but you opened up your own office
Yep.
over here in North Scottsdale.
Yep.
Tell me a little bit about this space, how long you've been in business, where you're located.
Absolutely. So we actually I just opened up this branch here in North Scottsdale. We're located off of Pima and Perimeter. So that being said, we're located right next to the 101, super easy access for you to stop by. We got a full office here in the back, full conference room to kind of go over things. And what I like to do is, I do consultations in here, kind of go over everything, but I also like to meet my customers out. I like to make it a little bit more personal so they know that I'm, taking care of them and that I'm with them, throughout this whole time. I'm not just there to, get them the home. I want to be their lender for life and, help them with their financials for, the rest of their life.
Yeah, that's
So,
super important part of this whole
absolutely.
transaction. People gotta realize this is not
It's not a one and done.
Yeah,
No.
we're here for you.
Absolutely.
Why? Because we enjoy it.
Yeah.
That's the reason I started real estate, because I didn't want to be stuck behind a
Yeah.
desk my whole life.
I know. I know.
I like working with people. I like helping them.
You and I both, and that's kind of why I opened up this branch. Is I wanted to be something different. I wanted to kind of shock the market and bring a whole different style of lending. Just very truthful, very transparent, and I'm building my team very slowly and specifically for that reason.
Yeah.
I'm very particular with who I bring on my team and on my sales force and on my operations team to ensure that they all meet my standards of experience for my customers. That way, everyone's getting treated the same, and no matter how busy I get, I can maintain that service for them.
Yeah, and it's extremely nice to know that there are people like yourselves who have those core values.
Absolutely.
Like, it makes it a much easier process for the consumer.
It's rare.
It's rare. That's what I always say. Everybody is like, what's the difference?
It's out there.
What's the difference between a good agent, a good lender, and bad lender? It's like, well, it's a difficult question to answer.
is.
I just say character.
I think that's
Character.
I think that's it.
We all have the same tools available to us.
We do.
So
No, I definitely agree with you. Character is kind of a big thing for me too.
Yeah.
And so, anyone that comes and works with me, they can absolutely be confident that they will have the best service they can possibly get and full transparency throughout the transaction and post-transaction as well.
Well, I'm certainly looking forward to doing business with you.
I look forward to it.
And great. Well, thanks so much,
Of
Dillon.
course, no, my
Appreciate
pleasure.
it. We'll be back, I'm sure.
Yeah, no, I'm sure we will. We got lots more to talk about.
Absolutely.
All right.
All right. That's a wrap.